Good morning. Welcome to another beautiful Monday in the year of 2024, and welcome to another episode of TN Chats with Rionfx. It's a pleasure to have you guys here, as always. I know we would have more people soon, but until they're here, we're just going to get into the business of the day. So, as usual, we like to start out our Mondays with a little tea. Usually we're supposed to have our teas, and I'm supposed to be on video, but I'm not feeling too good today, so I'm not. I just woke up and I just want to do what is needed to be done. Like they say, consistency is doing it even when it doesn't feel like. So, so we're looking at the markets today, and my key focus for this week would be on the JPYs and the USD. Okay, I had a session yesterday with my friend Johanna, and we also did look at these pairs. Okay, and we're also going to be looking at them today again. But as usual, before we go further into charts analysis, we want to take a look back. We want to revisit our previous week. Let's talk about psychology. Let's talk about emotions, and let's talk about experiences. So, what was our last week like? How would we describe our last week? Did we face any challenge? Do we feel like there were things that we could have done better? Do we feel like there were things that happened in the market that was unknown to us? We just like to talk about those things. So if you're new here, this is the process, and this is, the flow of things on everything and charts. So I always leave the floor open to each and every one of us. So whoever wants to go first, please feel free. So just give us like a revisit of your last week, and then if you need any corrections or things you feel like we can chip in for you, definitely we would. So Shakes, did you have anything you want to share?
Like my chat or what?
No, like, do you like, how was your week last week?
Oh man, last week I was just paper trading last week and back testing though.
Okay.
But some most times whenever I'm paper trading or stuff like that, like I tend to place more nice trades. But on my life account, whenever I go back to my life account, I'm not I see myself making mistakes. I'm missing trades and all.
Okay,
So
and
I don't maybe
have
I think it's just psychology or something. I can't tell.
okay. Um, so there was this space I attended last week on psychology. I'll be this weekend. I think this was like Saturday, you know, and they were talking about psychology and technical edge, which comes first. And the truth about it is, I couldn't agree or disagree, less with them about the fact that some people feel technical edge comes first, while some feel psychology comes first. But for me, I am of the opinion that psychology comes first, but the only way to beat psychology is through the development of a proper edge. Now, an edge is a composition of your psychology and your strategy that gives you an edge. You understand?
Yeah.
That is what gives you an edge. Just give me a moment, please. Uh, sorry, guys, I'm back. I needed to attend to something quickly. So, So yeah, so you need to have like you need to have that balance between the two of them. It needs to be like a composition of the two of them, like I said. So your psychology would determine how you build your strategy, and then that makes up your edge. Okay. So there are people who have like perfect psychology, you know, they know how to balance their emotions, they know they've been able to heal from certain problems and everything. And there was something someone said on the call, I think forgotten his name, but I think it was something DM or something, Dean Michaels or so. And he said something, he said he broke down psychology, and I loved how he put it. And he said, in terms of psychology, when we're talking about psychology, we need to understand that psychology is as a result of experiences built upon experiences, things you've learned over time from experiences, they shape your psychology as a person, especially your behavioral psychology. You know, the major psychologies that you need to deal with in terms of trading is cognitive psychology, behavioral psychology, and sometimes neurophysiological psychology, which is, physically how you even react, in terms of when you're scared, do you panic and all of those things, those will be under neurophysiological, you know. So when he made mentions of those of the fact that psychology is built up as experiences, and sometimes none of us actually come into the market as pure babies. The things you grew up with are things that you've experienced through your childhood. So they kind of make up how you think, how you reason, how you perceive things, what your fear level is going to be, your levels of insecurities, and all of those things. So those are like key problems in terms of psychology. And nobody comes into the market as an island. We all come into the market bodied human beings with, we already have a certain level of knowledge. We're not just empty. So it is hard and difficult for you to say you want to eliminate psychology out of a person. It's part and parcel of you. So now what your edge would do is to take this psychology, combine it with your understanding of yourself, of okay, so this is my problem. Then you build an edge towards that. And that's what brings you to the realization of what type of trader you are. So you see, some people have short-term span where they can handle emotions short-term. For someone like me, I don't like the hassle of seeing candles printing ups and down, ups and downs. It's hard for me to trade. And psychologically and personally, as my kind of person, I'm a more patient person. I don't mind folding my hands, you get, to wait for something to actually play out, to wait for things to come in line. I'm a sole believer of time and fate, you get. So I can actually take a trade and sit and watch the trade. It's better for me. My emotions are at peace, are at safe, because I would like to do other things with my time. I just don't like to sit down. I'm not that kind of a person. So in terms of when you're talking about your trade and you're talking about paper trading, and when you get into your account, it's a different thing entirely. The one thing you can try and implement is this: paper trading is good, it's nice, but you also need to understand, how do you feel when you're paper trading? And are there things from your past that could be hindering you emotionally or psychologically from being the best version of yourself as a trader? Is there something that scares you? Have you lost a certain amount of money before that puts you into a place where it was just so hard for you to get out? Are you traumatized by something? Now, if you actually are traumatized by something, like, everybody blows accounts. It all depends on the kind of money you went to blow. I know people who have, blown their school fees away. Me, I'm someone that have even blown my uncle's money. As at that time when dollar was still 300 naira, I blew 1.5 million of my uncle's money, which was big money as at that time. And I did not step a foot in his house for almost a year. And he called me and I'll tell him, and the market is bad. I'm just trying to get this, till I finally opened up, because I needed to heal from it. Because the more I tried to, try and amend what had happened, the more I saw myself losing more money, because I was scared and afraid. I was still in pain of what had happened. So it kept hindering me from actually doing better. So Paper trading is fine. It helps you create, and understand a certain trading system or algorithm that works. And that helps you build an edge over time. But you can't build an edge without actually sitting and looking back to say, okay, this is my psychological problem. If only I would heal and do this way, then it would be better, because you can have a written system of rules. If prices get to this place, you buy. If prices get to that place, you sell. But if your psychology is not in line with that, you're a person, you're not a robot. And that was the counter I wanted to give someone on the call. And he was talking that edge comes before psychology, and a robot trades without an edge. If you call a small child and you tell the child every time prices come to this place, just buy or just sell, the child is going to be able to do it because he has no relevance or psychological backing towards the idea that he's either making money or losing money. He doesn't know what he's doing. But when you come into the market knowing that you're here to make money or you could lose money, it changes entirely. And the reason that what makes you a trader is the presence of that psychology. That's why you're human, and that's what makes you a trader. A robot is not a trader. A robot is an algorithm. It just takes instructions and does what it's supposed to do. Again. So now, similarly, you need to look into it and say, okay, what is the problem? And then add that to your edge. So if your problem is that it's the time frame you're on affects you and it doesn't let you think and those kind of things, then you will then start to look at what you can do better. My dog can be crazy sometimes. So yeah, so that's that, and that's one thing you can look into. So for me, the best bet I'll tell you is you can cut your risks on your live account. Use the same thing that works on your paper trading, and over time you will build confidence from there to actually start to take trades better on your live account. But do the same thing you're doing on your paper trading account. When you get your live account, if one of the things that scares you the most is risk, cut down your risk. Don't try to jump into the market to make so much at the same time. It won't help. Okay. So I just decided to share this so that you could have something to kind of like resonate around um throughout the week or even while you're taking trades. Okay. It's an aggregate. So you need the both of them. And the most important one for you as an adult human being, which has a lot of emotions running through them, is you need to actually do focus on the psychology part. Okay. So I'll go next. For me, my last week was beautiful. It was calm. I took just 2 trades. I lost one, but I made money off the other one. Okay, I took 3 trades. I traded NFP, but majorly last week was just CAD I made 100 pips from CAD and that enabled me pass 2 accounts, 2 prop firm accounts. I made money on my live account. That was calming for me. I didn't need to take too many trades. I saw an opportunity on CAD and that was enough for me, honestly. I didn't want to overdo, and I was calm with it. On NFP, I was hoping to see buys, but the DXY became very bullish. I was hoping for the DXY to come back around the 102 level here, just this gap that was here, but prices bought from here. So we had buy stops on gold, but we didn't activate, which was a good one for us. And NFP didn't decide to do that scissors move it does, where it clears buy side and sell side at the same time. And prices sold. So we were on the charts while it was selling. We didn't make any entries. We were waiting for it to clear liquidity just below around I think that was it 2028 level. And after prices had cleared the liquidity there, we jumped in for some buys and we made some quick change that helped facilitate some people's vacation over the weekend. But I won't call names. So yeah, just after this level, and we took this quick buys here, and we made some profits of it. Johanna, if you're on the call, you can see, just like I said yesterday, the sales were going to continue. Can you see? So actually selling hard. just at the open of the London session. It's coming back down, but we'll definitely get opportunities to buy once we once we clear, you know, those levels I called on. So that's that for me last week. Last week was a beautiful week overall. It wasn't a break even, so I am grateful for that. So until after the analysis session, we won't have so much to say. So I'm just going to open the floor now for Johanna to take over because today is a joint session with Rionfx and Trades for this community as well. So Johanna, please take over. Johanna, are you speaking? Because I can't hear you.
Are you hearing me?
Yeah, I can hear you now.
Oh, okay. Sorry. Yeah, sorry. I was saying, good morning, everyone. Hope everyone is having a nice morning so far. I was just thinking, if I can just share my screen.
Yeah, you can.
Okay. Let me just, So, can you guys see my screen? Full screen?
Yeah, I can see your screen.
Yeah, okay. Yeah. So it's a pleasure to have this joint call this morning. So like Ryan mentioned briefly, we had like a short call yesterday, going through some of the pairs and discussing them over again. Last week for me was essentially an all right week, not too bad, not too good. I had one loss and I had like one win on gold and one loss on I believe it was JPY, if I'm not wrong. I didn't journal it last week, but I believe like that was a 1-1 each. So for this week, I'm excited because well, last week was very interesting. We had FOMC, we had NFP, so there was a lot of things going on, as well as like being the last week of the month and being the first week at the same time. So I think that February is going to reset, especially going on from today and moving on towards the rest of the week. So personally, I'm now on FX Streets. I woke up quite early this morning, actually, reviewing some of my trades, and I closed some of my trades that I was already in due to market change. So for Monday, we can just quickly look through what we have when it comes to the fundamentals. So today we have some news coming up, some dollar news, essentially some euro news as well that will impact the euro. I'm quite interested in seeing how this PMI will work out. And let me see, for Tuesday, I believe Tuesday is the one where we have, if you're trading AUD, you should be aware of this coming up. So me personally, I don't like to enter my trades on Mondays due to data. Collecting data over time, I've just noticed that my way of trading and my approach is much more respected on other days. So yeah, I'm interested in what's going to be happening here. Let me see. We have some important speech coming up by the Fed. So yeah, I'm not really looking into any euro pairs this week. but it's of interest. You know, it will euro affect other kind of currencies as well, depending on how strong they are compared to each other. Wednesday is a bit of a slow week. So essentially, yeah, what we're looking at is basically these two coming days, today and tomorrow, just being aware of, okay, we have a lot of speech coming up, risk accordingly, you know, and try to approach the market in a certain way. So for my pairs and what I'm looking at, yeah, so last week, beginning of last week, we were on this call, and we briefly spoke about the DXY, and the intention behind DXY and what we could expect coming up. So from my view, if you were here, I briefly spoke about the fundamentals behind it and what we could expect for that week, right? So if you remember, I mentioned that the DXY or analyst in general was speaking about DXY being in a range between 103 and 104, right? So we were in this range for quite a while. Market did not really know where to go, so hence to why we also saw a lot of volatility and a lot of choppy price action. Now, this one was very interesting because I was just waiting for price to fully break below or above. And as Ryan mentioned, we were also on this call trading live NFP, which was very interesting. And it ended up with, you know, the dollar being very strong, hence why gold also pushed. Wow, look at this thing. Why gold also pushed itself all the way, because if you just focus on this area, the beginning of last week, I spoke about, I believe price was here around this area, or around below here. I believe price was going to take out some levels here and as well as go all the way up there. So this could have been a very nice long position to buy. I was looking for an opportunity. I didn't really find any good one, so I just left it for that, just to watch the market. You know, sometimes you don't really have to enter the market just because you're seeing good opportunity. Just see how it plays out, and especially for a week that we were in, you know, a lot of news, a lot of things coming up. So to protect my capital, I just chose to watch price, you know, get above here and as well as reaching up to this level. But there was a period around this level that I entered a long position. So I believe I entered around here, and I took it all the way up there and I closed it. Now price did close exact at this level, around 2065. And this level was based on, I believe this was a weekly level that I was trying to approach. Let me see. Weekly or monthly level, let me see. Initially, we could see that price on the monthly time frame had been rejected a lot of times, these 3 times here. So I was expecting, I believe it was actually like last month, expecting price to just initially come out and take out this level somehow again and reaching those levels and then coming back down. So for gold, I'm overall bullish. Now, I don't know what's going on here. I was expecting price to come back down here around this level, possibly surface around this level and possibly go back up. Now that we are seeing prices doing wahala, it's a good thing we are just watching. But as Ryan mentioned, price did come during NFP and sold off really hard. Now, it did sweep off some liquidity below this area, and we took a short-term buy. I even held this. I even entered gold, and I held it even like throughout the weekend, actually held it. And I just took a lot of I just took profits on the way. Set my target on break even this morning, taken out on break even, so risk-free position, but yeah, it's definitely selling. So I'm just gonna see what's gonna happen. I'm interested in seeing the price action throughout this day. I'm definitely gonna buy due to gold on the daily. You can see that price has, this was let me see here. Right. So price closing and rejecting twice below this level is quite interesting, right? So price doing that one time and then the second time, and it hasn't fully closed above this previous level, then I'm definitely seeing an area where price might let me remove this. This one is annoying. I'm definitely seeing an area. We'll see probably if price take out this level, probably this area. It really depends on what price does for the rest of the day. But I'm seeing an opportunity coming on the probably 15 minutes or something to then push up price, come back to this level here, right? I want price to fully come back up here, probably test this area, test this area. This is just like a long-term view though, anything can happen, but I'm just seeing price coming back up here, testing this liquidity level. As you can see, this is a level that's been tested a few times, as well as going down to the 1 hour. You can see that price has previously respected this area. So I'm seeing price doing something around this level and then possibly coming back down to around 2042, 20, well, this level here, testing this level, seeing what's going to happen here before continuing up, because this wasn't really, price didn't really take, it took out probably, but it was more like a sweep. You can call it a sweep. And then coming and closing above. So if you close above, then, you know, I'm gonna know what price action is gonna give us more from that scenario. But for now, we're interested in buying and seeing where we might buy from till this level to begin with, for rejection down there. On CHF JPY, very, very interesting. So Ryan was talking about JPY and the JPY pairs. I even closed out my GJ this morning, as well as CJ. So it sold off short term. So I had entered my initial trade, I entered from this level, right? Once price was giving me some, I believe it was on the 15 minutes, price was entering, I believe we saw, let me see, was it 15, 30 minutes? So just to explain very short how I trade, okay, how I take my trade. So my strategy and my approach is it's basically market structure. So something has to break something else for me to enter a trade, right? So that's just a simple term of market structure, right? But my strategy is like, it's really more only based on that, as well as like looking at liquidity. So for me to like even take a trade, I will need the 4 hour and the 1 hour to break at the same time. Not necessarily at the same time, but both time frames need to break, right? Because I need a synchronized market condition, right, on the 1 hour and the 4 hour, right, after viewing my overall bias on the daily or on the weekly. Now on CHF JPY, on the, I believe this was on the 1 hour, price had broken to the downside. So I know that some people probably view market like this. So if price creates a high and a low and a high and breaks down, you know, I know some people probably view this as an opportunity to continue selling. But what I do is that I find a high, low, high, and a market break, right? With the candle body, not with the wick. I don't really use wicks to choose out my breakout structure. I only use full candle body. So once the price has done something like this on the 4-hour and on the 1-hour preferably, right? I prefer both time frames to do that. Then I will find some kind of entry on the 15 minutes, right? And then I will try to find it on the 3 minutes as well to just like have a very nice entry to then continue my buys from here. So it's a bit of a different approach, but that's just how I do it. So just to explain CHF-JPY, the reason I took this was, so basically we are on the long now. This I have to applaud Ryan for this call because he said it's going to be bullish. I was initially bullish, but I was expecting price to get down at least like fill out this candle like around this area. So my short position was from up here down here. Now after having a call, I had to think twice. So once market opened, I was just looking at price and I was trying to conclude whether price was going to get around this, you can call this like supply demand area, right? Or price will continue. So what I did was that I found some, I believe it was on the 15 minutes, I found something called an invalidation level. So for me to enter any position, I look at something called invalidation levels, okay, invalidation points. I have new invalidation points, hidden invalidation points, and I have normal invalidation points. So I found some invalidation points on the 15 minutes and as well on the 3 minutes. So I entered this trade. My 3 minutes was on my 3-minute invalidation level is around here. If I go down to 3 minutes, right? But my rule is that if the 4-hour and the 1-hour does not break altogether, and it's only the 1-hour, because of data, right? Because I've collected a lot of data, I know the 1-hour normally only respects the 15 minutes and then move from there. So I won't normally put the 3-minute invalidation level if the 1-hour is the only one that breaks. So yeah, this is basically a reason for me to take this trade. It's a risky one because it's on a Monday. I don't really like to take trades on Mondays, but I just wanted to see what was going on. But applaud to Ryan for this one actually, and his view on this one. GJ as well. You can both see that the JPY pairs in general, they're all quite bullish. If you view it from the weekly, you can see that okay, obviously we've seen some rejection here. But on the daily, let me see, on the daily we've had a strong, very, very strong bullish momentum going on all the way. Now, these levels that I have taken out here or that I've marked out here are interesting. So price reaching this, I believe this was something we discussed with Ryan. I was also, guys, on this one, I was also short from this area. So I short from this area and I did close around, I probably closed around, as I was saying, yeah, the GJ overall bullish, but my view was to sell to buy basically. So the selling will be a counter trend with the low risk, a risk of 0.5%, honestly, just to then find a possibly entry after the 4-hour or the 1-hour here. So this is a very interesting one because JPY pairs, fundamentally, the Japanese bank, they have decided they haven't really come up with any decision to cut the interest rates for the moment, but they have discussed that there's a possibility of the Japanese yen to continue being the same condition as it has been the past like 4 months now. So I'm interested in seeing a long-term bias on the JPY pairs being strong. So CHF JPY has been in a very, very upside momentum, as we can see, now if price does reach this level again, we might see a drop, but overall bullish on JPY. So fundamentally, I was just viewing some bank reports this morning. If anyone wants to access any bank reports, you can't really access it on normal websites. It's either you have a connection to someone that trades in a hedge fund, or you have a hedge fund account, or you can also access PMT. PMT's prime market terminal data. They do have access to bank reports there if you want to look at that, but depends on how involved you really are in these reports and things. Me personally, I'm interested in finance, and yeah, so I just think it's very interesting to read about the economical events. So this is from, I believe this is from Credit Agricole. So I believe this is a Swiss franc. Let me see if this is, double check. Yeah, so it's a Swiss, yeah, so the bank report is the bank is basically located or based in Switzerland. So for this report, I was just reading through, nothing too serious, just trying to understand what we might look at. So for the dollar itself, if we just look at this scenario here, I think that was quite interesting. The post-FOMC boost to the USD did not seem to last, as investors were quick to shift their attention from the Fed's pushback against dovish market rate expectations to the outlook for US regional banks. So this one, I believe this report was already published on Friday. So they haven't published anything for today. They will probably publish something later today after the speech or something. So this was obviously before NFP, but it gave us like a nice highlight to what we might see this week though. I believe I was also focused on, let me see. It was a very important statement here I wanted to explain. So basically, like I mentioned in the beginning of last week, we weren't really sure of where the dollar were heading, according to ING. Okay, so ING is also a very huge, important bank. It actually has a huge role in the forex market, even though we don't know. It's one of the biggest players in the market, or playing behind the markets, right? So Angie was explaining that, when it comes to the dollar, we might see a range between 103 and 104, which we did, right? And they did explain that we might see a positive development, and this was before NFP. Now, if I had picked that out and understood, like, oh, we might see a positive development, we might see a positive DXY, right? Which NFP might have pushed. If I had just picked that out and understood, like, oh, okay, this might be a confluence for the dollar to push on Friday, the sell I was already on, I could have continued holding that, right? Just for an extra confluence, along with my technical analysis. Now, here, this is after that ING report, which concluded that, okay, basically the range has been respected throughout the week, but analysts are also saying that, okay, we want to see they want to see more of a positive development, meaning they want to see a stronger dollar, right? Now, just take this with a pinch of salt. Don't just read something or because they're saying they're buying, you're not going to buy. Don't do that. Understand your technicals, but understand that you're basically trading economics, right? So me personally, if I'm viewing something technical, I really want to understand like what's the reason for that push, like where is it coming from, you know? So that's why I'm viewing bank reports with the pinch of salt. I don't take out the whole context and just go about it. So I think this part is also very interesting. If today's US data comes in with line with expectation, it could corroborate the Fed's view that the US labor market is gradually coming into balance and thus feeling disinflation in coming months. So basically, now since this was before the NFP release, there was basically saying that okay, if it comes out accordingly to what they were previously mentioning that the dollar might be positive, you know, this will help. This will basically help the dollar being in a dovish forecast. Okay, so what does dovish forecast? You guys have probably heard about dovish and hawkish. So just to explain the word dovish. So if someone is saying dovish and you're reading that, you basically think about something favoring the economical growth and employment. Okay, then rather like cutting interest rate or like tightening in the interest rate. Okay, so dovish, think of it as like it's just favoring economical growth. So we might see something like that happening in the market. So this is why my gold trade, I'm very particular and specific with how I want to go about it, because again, we saw this high come up there. I believe this high will be taken out eventually, but we might drop from there significantly as well. So, you know, short-term buy to possibly sell later on, depending on how the DXY moves. So as we can see, the DXY does have a huge area and different levels to probably come and fill out. But for now, price is currently above this level. I want to see the daily. So, you know, it depends on how the daily as well close. I'm interested in how the daily candle close before moving on with anything here. So my view overall is just I'm waiting for price action to play out throughout this day. Monday today, there's a lot of things going on. I want to see how the week is settling. From there, I just take the opportunity that's best for me though. So yeah, it's this view market review this morning from my side is a bit what to call it. It's not I won't call it the best because I'm going to review it myself later tonight after all the events that's happening throughout the day though. But as far we have some more bullish sentiments and bias overall. So yeah, that's basically like just short-term understanding of how I go about the market and how I view it. So yeah, Ryan, do you want to say anything? Anyone want to add anything or ask questions, just let me know.
Thank you very much. Thank you very much, Joanna. And your analysis are apt. I like the fact that you use bank reports as well. It's like you're going to send me links for bank reports. Me, normally, I just have my own way of being crooked and getting and understanding macros. They're like backdoors for me. So I'm going to share my screen quickly. Okay, so I believe everyone can see my screen now. Sorry, when the call was on, I was talking to my friend. I didn't even know I wasn't muted, but thank God I had not started recording. But yeah, so I have similar outlook on gold, and I am still expecting that if gold is to sell off massively, I still need to see some repricing back into the supply area for we to finally get that. So I feel like this was just a level for I feel like this was just a level for them to keep extra money in the market. So it's just an extra level for them to keep extra money. We get more sales from this level here. So I'm still bullish as well on gold. But while you were analyzing the chart, Joanna, I noticed something on the daily. Yeah. If you look at gold on the daily, the invalidation point for this bullish trend, this bullish structure we're seeing on the daily right now, is this level. This is the last significant low on gold. We need to see prices break here before we can say for a fact that we are now full-time bearish on gold. And this is also a weak higher low because it hasn't created any new higher high, hasn't invalidated any previous highs. So we have two levels here to look out for. Now, when I say a weak low that hasn't really taken out any highs, sometimes I like to map them out as liquidity. And why I like to map them out as liquidity is, so guys, I use a lot of logic to describe and try and analyze the charts based off, knowledge from past and how these things work and operate. So if we have a weak low that hasn't created a high, it usually is as a result of people buying into the market because they say, oh, it's a buy trend, and prices have pulled back down. It has given us like a retracement. It's time for us to buy, or prices have gotten into a support level or something. That's what creates those weak lows. And those weak lows are supposed to push prices towards to actually say this is a key level, to actually buy above it. But the moment I start to see price failing to create a new high or break a very strong high or a key level in terms of structure, I know for a fact that there's something that they are looking for below here. And if you look here clearly, you can see that there's an order that is of interest just within this area. So probably we take these lows out, tap here, and become aggressively bullish, or meet them. We're still going to get those buys. If we look at this internal structure, on the 4 hours here, we had this bearish structure here, and prices finally coming to like clear it out a bit, but not really. We have this level here on the daily as a possible, I'll just call it a block. It's not that intense for me. I don't think it's going to do so much for this area on the daily here, where price is already approaching. Okay, I don't think it's really going to do so much, but it's valid because we saw it take out this internal highs at this level here. So I take out this internal highs at this level. So it's a valid level. So if you go back to your 4-hour, let's look at it properly. Okay. But now, if you look at it as well, you see that it has been mitigated on the 4-hour. Prices tapped into it and then moved this thing. But as at when prices tapped into this block, it had not cleared. It had not broken this above the structure here. It had not done that. Okay. So that's why I'm still considering this level. So I'm just going to wait to see how gold plays into this level before the New York session, alongside while we're waiting for the DXY. But we also need to be careful because if we had valid areas just above those places, then we also need to make sure that we are not just gambling, but we are doing what is necessary of us to do. Okay, so that's my own view on gold so far. Sorry guys, I'm just trying to set up something. So that's like my own view on gold. And then the XY. The XY is the major thing that is going to solidify all of this. If we look at the XY, we're in this range. I believe I mapped out this range on my chart last week on the call, where me and Joanna were discussing on how prices would stay within the region of the region of 103 and 104, but we had not met 104 not until NFP, and that was when prices finally, they sent prices to 104. Now, like she said, we have this huge imbalance, and me, if you know me, if you're on a trader on this call and you know me for a while now, you know that I am a big time reversal trader. I love reversal trade. It's tricky, it's scary, but I like it. Yeah. Well, so I want to see bearish momentum start to come into the market. I need to get like a bearish structure around here on the lower time frame. So probably like the 1 hour time frame. And I need prices to be exhausted. When I mean exhausted, I want to see exhaustion. I want to see this price actually like move and keep trying to buy, but then just break structure like very quickly that nobody notices. And then I'll start to look for buys on that gold, But for now, we're still going to wait for the market to do what it wants to do. I'm seeing there's a level just above. I thought Joanna would have cited it. I think she has, but maybe didn't just pay attention to it. So there's this level here that price is already in. Okay, so I want to see how prices plays around this level, or we have a sweep of it. So one of these two things is very possible. So we either get a sweep of this level, or we see prices bring bearish momentum back into the market from this level. So all we're going to do is just sit, watch, and wait. And once we finally get this, the XY, once it sweeps this level here, sweeps this highs, which is like the proper thing for it to do, because we're trying to invalidate all this bearish structure. So we want to actually see it sweep. But if it doesn't sweep, let's get a reaction at least. Come in bearish with a good bearish reversal candle back into this area here. Prices pulls back up on the lower time frame again. That's after it breaks into 104 and goes back up again. Then we make entries and start to go short on the dollar. So we have pairs like our USD CAD, USD CHF, USD ZAR, USD MXN, USD NOK. Okay, we have all of them start selling immediately. Then we start to see short-term reversals on pairs like GBP USD, Euro USD, NZD USD. The AUD is very strong right now, so it's going to be a bit tricky for it to sell, So we'll also look at that as well. So we'll probably see more moves on the AUD USD because it's strong. So the buys would be more aggressive than that on NU. Then once the dollar gets weak, we should start to see more pumps on the JPYs as well. Okay, so let's quickly look at GBP USD. Okay. So GBP USD seems to have started something here, but I'm still not okay with it. I want prices to actually take out this low. I want prices to sweep here first. Not stop there. I want prices to actually sweep it a bit. But if prices doesn't sweep it, it means that they are just kind of like stalling prices around here until the XY starts to get bearish, then they'll pump it up aggressively. But either ways, it's not it's not too much of a risky trade to take, but this is on a 4 hourly. So you probably take this trade here, you'd have to leave your stop loss open for about 40, 50 pips in order for prices to not sweep here and sweep your stop loss as well. Okay. Or we wait for more confirmations, which would then require us to wait for GBP USD to take out these present highs, lower highs here. Okay. Wait for it to take it, then pull back into this would then probably be the originating demand, pull back into this level to create some sort of, probably a double bottom or something, and then we'll take it all the way up to this level. So we should see prices coming back into 1.2700 areas, which would then fill this imbalance or this void to at least 50% of the imbalance, and then we continue ourselves. I've placed out this area here as a target since last year. I say last year, since early this year, since the first call, this has always been the area of target for us to see more buys. And by the time prices would get here eventually, I'm expecting to see that the DXY would have taken out some series of lower highs on this bearish trend and would finally be coming in, would have filled up this imbalance here. Okay, this level here, this 105 level, and then would start to run back into the 103 level aggressively. There would be need for it to do that in order for them to kind of like stabilize the dollar, because you can't keep the currency inflated at all times. There are times where you have to like create strict policies that would drop it, and it has to be a balance. The market is a series of demands and supplies, so you can't just leave demands unwavering like that. You need to bring prices back into them. So they'll definitely do that when we get to 105. The reason why we are pumping aggressively to 105 region is because they have left an imbalance here that needs to be filled. Similarly, they might do the same thing as well. Hopefully, they don't do it here because they've left an imbalance here. Hopefully, they don't just pump prices into 105. But if they do, we don't lose. At the end of the day, we are traders. We go in line with what the market is giving us. So if that's what they want to do, definitely will put our hands on the table and wait for an opportunity that best suits us for us to finally go into the market. So talking of JPYs, okay, I showed Johanna this yesterday on CHF JPY, where I went for it to tell her that that CHF JPY seems to be in like a flag position. Okay, seems to have been in a flag position here. And my reason to this is because I have this on my weekly time frame. Okay, we can see that the CHF JPY has been extremely bullish for like, since God knows when, since like 2019, we've been bullish aggressively. And this is the last diagonal resistance point by this trend line, which is targeted at the 173 region area. And I'm expecting prices to actually tap into that level for me to finally get the sales back. And we're not going to get the sales back like very far. The most we're going to go if the JPYs become extremely strong is we're going to come back to 155, which would take us probably maybe like 3 months, 4 months to actually get here. So if I actually can get bearish sentiment from 173, I would stay long. I would stay short long term on CHF JPY. I probably won't hold, but what I would do is I would be looking for more short opportunities because the market will start to give me more bearish sentiments. Okay, so similarly, when you look at GBP JPY, when you look at GBP JPY as well, GBP JPY seem to have been at a level, but like I mentioned something about how I understand psychological levels to work. The reason why they are called psychological levels is because that the market creates a lot of sentiment around those levels, building the psychology of traders around that level. So we've had prices stop here in 2015. Prices came back here in 2023 November, and we have prices here again in January 2024. Now, why didn't they take out these levels last year? Why did they keep this level? It's to create a level of psychology around it, because the more psychology there is around a level, the more money would be put on there. So there are a lot of people identifying double tops right now, key level. Prices haven't broken this level before. It's a very strong level. But you need to understand that the fact that the level is strong is what makes it more vulnerable. And I didn't used to understand this concept when one of my friends used to tell me. But the more you think of it as a strong level, is the more reason why your human nature gives you this guts to tell you to put all your money there. So you've seen that meme when they say the devil comes to you and whispers, put 10 lots, put 50 lots, put 100 lots. That's because they create that confidence for you. So when I looked at it, I was like, this place is a tricky one. Okay. We are getting like, something like an evening star, but it's not a proper evening star. We still have bullish rejections at this level. And if you look at it very well, we've been very bullish. Prices have even tried to come down from around this area severally, but has failed so far. So it's either they would sweep the money above this level, just as we're waiting for CHF JPY as well. I like to do this thing where I tally pairs because they move together. They just don't move and leave the others behind. So they either stall the pair, trap the pair, and then finally let it flow. So most times this can be a trap. So it's either they will pump this price this week to sweep liquidity above that level, then start to dump it aggressively. So me, I wouldn't say I trade pure technical analysis or pure fundamental analysis. I impose sentiments in my trading. So there are times where you can see that I'm on a trade and I'm holding that trade with everything, with every might in me. And some people will be like, are you not crazy? Why are you holding a trade with so much loss? In my head, I'm like, if I have an idea of what's going to play out, I'm willing to take the maximum risk whatsoever to it. And if it doesn't go my way, that's fine. But this is something that I have not just done once, not 10 times, not 20 times in all my years of trading, but I have seen it work. And sometimes I like to stay with my guts. If I have that gut feeling that this is going to happen, I just like, want to flow with it. So if you go down to like your daily time frame, you would see what I'm talking about more. You see that we're still bullish, and you can see that prices have been respecting this bullish trend, and prices just finally came back into like this level of demand here again. Okay, into this level of demand, and now we're still pushing upwards. So very likely we would have prices just do a pump to the upside, sweep this level, range a bit, wait for other pairs to kind of like accumulate as well. And then there's going to be a news that would kind of like facilitate the strength of the JPY. And all of a sudden, JPY is always going to do, what it does best. You can be waiting for JPY to sell for a whole week, and you just wake up Monday morning and there's a huge dump. And it does that a lot. So they would always find a way to trap people, because when you have that idea in your head now that JPY is always dump, you want to put a whole lot of positions and you're waiting for it to just dump aggressively, and then they'll ridicule you out of the market and eventually dump it out of you. This is from experience. If JPY has not done this thing to me, it has done it to me over 20 times. I remember in 2020, I kept waiting for JPY to sell at 153. And it just never happened. It wasted all my entire life. For 2 months, I was waiting for this sale. The day I eventually didn't have an account, I think, and I was trading FTM, then I blew my account. The next week, JPY did exactly what I was waiting for. And it was the same useless pair that made me lose the account, because I kept going in and getting smashed out, and I was going in hard, so like experiences in a way will just kind of like build your know-how and emotions towards certain things. So let's look at the JPYX. So we kind of have like an idea of what I'm talking about on the currency index. Okay. So if you see the JPY on the daily, it's not bullish yet. If you want to use the daily as an overall structure, this is a lower low, this is a lower low, this is a lower low, this is a lower low. Okay. These are all lower highs. And what starts to validate strength in a pair is when we start to see that what the bullish nature comes into the market, which means that we first have to invalidate a lower low, and then what? Invalidate a lower high. So therefore, we now have a break of structure into a change of character. Okay, so when we can get a sweep here, then the strength will come in, and overall, when we're able to take this lower high, then we'll then say for a fact that the JPYs are now strong, and we'll now start to see huge bearish momentum into the JPYs. So let's even look at the JPYs of the weekly as well. You can see so far so good. What we've had here is just like a shift, a minor shift here that's looking to go upwards. It doesn't mean that there's still no possibilities for what a downward movement. And this, my chart, is probably not going to be like the best. I don't think it's complete. Or hopefully, if we have like a complete version, I wouldn't say this should be like the lowest level so far, because we can't see it. But if you look at most of the JPYs, they all seem to be like at some sort of all-time highs. Let's see if we have another JPY index. Just Pepperstone is giving us an index. Okay, I really can't find an index so far. But if I get one, I'll search for one later. I'll check online, and then I'll analyze the JPY index and send to the group as well. So, well, until that focus is on the XY. Once the XY gives me that thing, you guys are going to see some crazy ass things that I'm going to do this week. Once the XY finally gives me the opportunity, you're going to see me sell USD CAD, USD MXN, USD ZAR, USD NOK. I'm going to go in on all the USD basically, just short term. I want to do like some funny things this week. I feel adventurous this week. Let me use the word. I feel adventurous this week, but safely adventurous, because I'd already mapped out my risk plan already. It's just on my notepad here. So that's all for this week, guys. I'll send in analysis later on, and this video would also be posted on YouTube as usual. Thank God today none of my files are corrupted. Last week was so annoying because I felt very indisciplined not being able to post, but I think with everything so far, we have a very good video to post on YouTube. And please, when I post it, don't forget to share to your friends. Don't forget to like. Don't forget to comment. Those engagements are the things that actually, help us go viral. And if you're still on the call and there are other episodes you haven't attended, please, just when you get to the channel, there's a playlist called Tea and Chats. It's strictly everything we discuss every Monday, and it's there. And you can follow up. There are a lot of things you can learn from it psychologically, and also technically, and also fundamentally. And then you would be able to learn how to build sentiments around that. So we have 4 minutes left, and I just want to ask, do we have questions? Do we have overviews or oversights that we want to run back to? Okay, so if we don't have questions for today and we're all satisfied, I want to say a very big thank you. And I want to give a shout out to Johanna. Thank you so much for being part of this call today. Thank you for always making our time to join. You're a real one. Thank you guys for attending as well, to the members of the community and those on the call and those who are not able to be on the call and those who would watch this video eventually. We want to say thank you, and please don't forget to also invite your friends for the next episode of Tea and Chats. We're hoping to build a community over this, in time. We know it's not going to be easy. Great things take time, and eventually this is going to be one of those great things that will be talked about in the industry. But until next time, until next episode, I wish all of us a great trading week ahead. And don't forget, risk assessment before risk management. It's better you assess it before you try managing it. Managing it can be difficult without prior knowledge to what your risk was. See you guys next week, and thank you so much. Have a great week.